Hey, friends of the internet. So, today we're going to talk about investing. How do you become an investor? And I know that this is usually something that a lot of people shy away from. We've probably figured out at this stage, if you're a millennial, you've figured out how to make money, whether at work or in your business. But how do you then move to what is commonly known as the fourth quadrant of that cash flow quadrant, which is an investor? Simply put, an investor is someone who has figured out how to make their money work for them. Now, I want to be very, very simplistic in my approach of getting you started down your road or down your path to becoming an investor. And if you guys think that it is easy, well, Charlie Munger, who is the partner to Warren Buffett, says whoever thinks investing is easy is stupid. So let's not go down that path. Let's go down a path that says, what do you need to do to become an investor? And the simple truth is, you need to know what is out there. You need to know how to look at companies, how to look at opportunities, and see the potential of earning a profit or earning an income from that. The most important place that I want to direct you is to here. I will actually have a link on how you can purchase this either on Amazon or takealot.com right below in the comment section. But this book was written in 1949, was it 1948, by Benjamin Graham, who was a professor at New York's Columbia University. Now, you might not know who Benjamin Graham is, but you'll probably know who Warren Buffett is. Warren Buffett was actually lectured by Benjamin Graham at Columbia, where he did his MBA, and he's perhaps the most successful example of this. Other people, of course, include Howard Marks, guys who are value investors. And what this book talks about is, it is the definitive book on value investing. Now, my investment style, or what I have learned in my 7-year journey in starting to become an investor, is that investing is a long-term game. I'm talking 20 years as an initial period. You can take that down to maybe 5 years. Anything less than that, I think, is quite speculative. I just want to read a few quotes from this book. Every single person who wants to be an investor, whether you want to be ultra short term or ultra long term, I think it is useful for you to get this book. I think the quote is underlined somewhere. Okay, yeah, here it is. In page 15, the investor's chief problem and even his worst enemy is likely to be himself. Now, that statement, buried in page 15, is actually what you're dealing with. You're dealing with not only opportunities and other investment professionals out there. By the way, I'm not an investment professional. None of what I'll be telling you should be constituted as investment advice. I'm just a person who, like you 7 years ago, was wondering, how in the hell do I become an investor? You are battling yourself because we are prone to emotional responses, and the reason I highly recommend that you get this book is that you'll be able to distinguish between something that is speculative in nature and something that qualifies as an investment. Now, because this is primarily for a South African audience, I want to talk about what is going on in the and we can talk about Africa a little bit in the South African context. I highly recommend that you get your hands on this. This is released every Thursday, the Financial Mail. 2 weeks ago, this was a very, very topical and timely piece of writing by these guys. Is SA Inc. worth buying? And this basically looked at the South African economy post the recent elections of 2019. And it looked at what the JSE had done. Now, here's a number for you. Over the past 5 years, if you had invested $100 or $100 equivalent in the South African economy or in the JSE, your investment would now be worth somewhere in the $82 mark. So you would have lost money over the past 5 years. So the South African market has been really moving sideways. The comparison, I think, in investing in the US is that your $100 5 years from now would have increased to $152. So I want you guys to start looking into the South African economy by really reading the Financial Mail, the Intelligent Investor, and this one is more of a daily one, the Business Day. Now, I'm of course highly suspicious of financial journalism. So my mainstay is this: it needs to be principle based. I don't look a lot at what the headlines suggest or what people are telling me to buy or what people are telling me to sell. Recently, and this is in June 2nd, or is it June 1st, 2019, the South African Reserve Bank reported that economic activity or GDP over the period, the first 3 months, of the year, was down 3.2%. Now, a lot of people on social media, were screaming recession this, recession that. Of course, it's not technically a recession yet, but I want you to go to the investment maxim that says you make money when there's blood on the streets, right? There's definitely blood on the streets right now. Is that the economy is really struggling because of a number of factors: political, global, with the US and Chinese trade war that is affecting emerging economies or emerging markets, with South Africa is in that mix. So I really want to start a conversation. I want to start a conversation based on people's initial digging. So dig into these publications. I'm going to be talking about a couple of ideas or strategies that we have used. And of course, like I said, we play long and long only. I don't trade in listed stocks or listed companies. In my view, a stock, or when I invest in a piece of a company. So if I buy First Rand Bank Limited shares, I am banking that over the next 10, 20, 50, 100 years, First Rand Bank will still be there and delivering value for its shareholders, in this case for myself now. Some people have asked me, how do you actually, I have 100 Rand, I have 10,000 Rands, how do I take that and actually start my portfolio of ownership of publicly listed shares? And there's a number of ways of doing that. One, your banks probably have a facility where you can invest in shares. I find that to be quite expensive, and there is a rounding off figure. Some banks, they want 10,000 Rands, and they have high minimums, and their fee structure I find to be restrictive. There is a platform that I don't make money from, by the way. I don't make money from using this platform or recommending it to you. I will put that on the comments as well, on the description of this video. Check that out. I call it the Uber or the Airbnb of share investing. You're actually able to purchase stock in the JSE that is recorded in your name, because there's a FICA process to that, and you're actually able to invest every last cent. So the reason why that's important, and you should know about that, is that if you have 10 Rand and a share cost, if you have 10 Rand 50, let's talk about 10 Rand 50. You have 10 Rand 50 and a share costs 10 Rand, you would traditionally only be able to invest the 10 Rand, and the 50 Rand would be in cash, not benefiting at all from the activity in that company. What this platform allows you to do is you can invest 10 Rand as one share, and that 50 cent as a fraction of the share. This is actually a very innovative tool. It's called the FSR, fractional share rights, where you get to enjoy the economic benefits and the economic downturns, unfortunately, because that's what investing is, of that underlying company or underlying share. If this all seems too complex for you, don't worry about it right now. All you need to do at this current moment is spend some time. Spend some time. I remember when I started reading financial mails, very very early on, when I was probably 7 or 8. That was before I realized that I wanted to be an investor. My dad had a small manufacturing business, and he used to stack these because that was his journey back then. And I would read these things and I wouldn't understand a single thing. What is net asset value? What is earnings before tax? What is earnings before tax, interest, amortization, all these things. But the fact of the matter is that there are principles that you can learn, and over time, you will be able to speak the language of investment. Now, I'm not saying that every single person that is watching this will eventually become a Warren Buffett, but I am saying those that are interested in learning about becoming an investor are best placed to have a look at this guy, The Intelligent Investor, Financial Mail, and Business Day. I'm also picking up on the Africa story with last month's issue of Forbes Africa. Very, very interesting article that covers the Nigerian billionaire Abdul Samad Rabiu on how he had a $650 million year. So how do you become an investor? Very, very simple. You start reading what investors read. So let's do this. The next couple of weeks, I will be pitching in and talking about terms that you need to be aware of, and companies that I'm looking at, and companies that I have actually invested in. And for me, this is a super, super long-term journey. It's a very niche journey, so I don't expect there to be billions of people looking at this stuff, but the ones that are looking at this stuff will be able to learn over a period of time, and I'll be able to share a lot more data in terms of rands and cents, dollars and cents, of how things are going, and how a year, 3, 5, 10 years makes a difference in really building that wealth. All right. Thank you so much, guys, for tuning in. Make sure you subscribe and comment as well. If there are things that I spoke about that you want me to give you details of, drop a comment and I'll be able to address those. All right. Thanks, guys.